Hello and welcome to NDTV Profit. You're watching IPO Adda, and my guest today is from Manba Finance. Their IPO opens on September 23rd, closes on September 25th. Price between 114 to 120 rupees per share. It's a fresh issue of nearly 151 crores, and the company is valued at little over 600 crores at the upper end of the price band. The company is a NBFC, which is financing two-wheelers, three-wheelers, and including electric vehicles, which is there, and it's present in 6 states, including Maharashtra, which is one of the key states for the company. And joining me is Mr. Manish Shah, who is the managing director of the company. Mr. Shah, thank you very much for joining us on NDTV Profit. My first question to you, sir, can you take us through your business model and the kind of presence that you have across India?
Yeah, thank you for giving the opportunity. My business model mainly we are into two-wheeler financing. So when I started, I will just take back you to the past, before 2 decades, when I thought that I want to be active in financial sector. So I thought that let's, go into lending sector and want to lend to a product where the risk is divided amongst many. So we chose the product two-wheeler. We were DSA for 10 years with the ICICI Bank, HDFC, City Financials. And then 2008, we started our own financing in the Manba. And presently we are at 6 states. And we are into all kinds of two-wheeler financing. And basically we are concentrated on Maharashtra, Gujarat, Rajasthan, and newly introduced states like Chhattisgarh, MP, and UP. And the whole idea is to reach out the customers where, they are less access to credit. So we are rightly placed in the city as well as the rural. So tier 2, tier 3 also we have covered and doing well.
Can you take us through your breakup of your disbursements or revenues coming from tier 1, tier 2, and tier 3 cities?
So basically I will give you the disbursement deck ratios from the Maharashtra. It is almost 70%, and then 20% is from Gujarat and 10% from the rest of the states. And in the Maharashtra, the complete tier 1, tier 2, the division is around 55% and 45%.
Give us a sense of what has limited you to only financing two-wheelers, because you are primarily a two-wheeler financing company, and do you plan to move out of two-wheeler to expand your offerings to four-wheelers as well?
Yeah, so we want to become a diversified financiers. So the journey has been started, of course, with the two-wheeler, but now we want to, add a new product, three-wheeler, especially electric vehicle three-wheeler, used car, and top-up loan, which has been given to our own customers, and small business loan. These all are the people we have less access to the credit. So we want to explore this possibility, and that's why we are diversified our portfolios and products. We are adding some products also.
You spoke about the fact that you are primarily financing two-wheelers, but now you're looking into three-wheelers and electric two-wheelers and three-wheelers. Can you give us an idea of the kind of demand that you are seeing for electric vehicles at your branches, and how is the financing different from the normal ICE engine financing?
So electric vehicle finance is day by day increasing, especially the day our traditional manufacturers of the ICE brand, they have started producing the electric vehicle, such as TVS, iQube is doing phenomenal. And there are Hero also has come, Honda is also going to come, Bajaj has also come from Chetak. So of course the Ola, Ether, all other companies are doing pretty well. And every year the penetration of the electric vehicle is keep on increasing, and we are completely in band with the industry. My AUM also consists of this better penetration of electric vehicle than what the industry is doing. And I am of the opinion that, it will keep on growing.
Any bifurcation in terms of the product offering that you do, means for a normal two-wheeler and electric two-wheeler, is there a different way of financing these two products?
Yeah, so electric vehicle, we are offering a little less IRR. As why? Because of the study of the last 2 years from when we started financing electric vehicle. The credit loss in the electric vehicle is very, very minimal, and they are very knowledge customers, I will say, and all have been having a credit history in the past. So this is the basic difference between the normal category of two-wheeler and the EV two-wheeler.
And what proportion of your sales currently is between electric and non-electric two-wheelers?
So the country's combination of the electric vehicle two-wheeler is around 4.5%, and the rest is normal, whereas our AUM is around 6.5% of the electric vehicle.
That's interesting, sir, because it seems that the penetration of EVs, especially two-wheelers, is happening much more in the tier 2 and tier 3 cities, and that's the reason why you have a higher percentage of AUM there. You're raising 151 crores. How are you going to use that 151 crores?
So we are going to use this proceed for the future growth and expansion, and to have a better leverage, and to explore the possibility of penetration of the existing locations where we are already there, and making more stronger the new products what we have launched in last 1.5 years.
What is the kind of impact that this will have on your capital adequacy? Because I understand that this will also augment your capital requirement. So what is the kind of change that will happen post the IPO to your capital tier 1 and tier 2?
So today my capital adequacy is around 25%. Yeah. So today the capital adequacy is around 25%, which after this event it will become a 40% of the capital adequacy, and that will really support for reducing my cost of borrowing as well as better leverage on the capital.
How will it have an impact on your net interest margin, sir? Because your net interest margin was around 11.16% in FY24, though it's fallen from 12.3% in the previous year. Because your cost of borrowings are going to come down, do you see increase in your net interest margins in FY25?
Yeah, definitely, because a year after this event, of course, this money which we are not going to pay any interest on it. So definitely my cost of borrowing, average cost of borrowing will come down. Top of it, we are expecting after an event-based, increase in my rating. Today it is BBB plus from CARE. It can go up, so that can also, definitely help me to reduce my cost of borrowing. And then eventually it can impact on, bettering my NIM.
Okay. Just wanted to get an understanding of your source of finances. Can you give us a breakup of what is the current source of finances for you, and how do you plan to diversify that source going forward?
Yeah. So presently we are borrowing, we have a CC facility, we have a term loans, we have a listed NCD, we have PTC transactions, we have DA transactions. And so these are the 5 modes of borrowing which we are presently using. And as far as on a lender side, we have a 3 PSU bank with us, 7 private banks are with us, almost 6 small finance banks are with us, and almost 22 NBFCs. So all put together, we have a 42 lenders to Manba. And going forward, after this event, it seems that you will be able to raise the NCD at a much better price, and we will be able to attract some few more lender, which can really give a great impact on my cost of borrowing.
So currently your cost of borrowing is around 11.98%. That was at the end of March. Once the IPO goes through, how much of an impact will you have on your cost of borrowing? How much will it come down to?
So we are of the opinion that at least minimum 1.25% will come down.
So it would be around 10.75% or so. Is that the level?
Around 10.50 or 10.75 maybe. Yeah.
Okay. And that would flow into your net interest margin as well.
Exactly.
Sir, give me a sense of your revenue seasonality, because you mentioned in your RHP that there is a seasonality to your revenue. Give us a sense of how your revenues and your profitability will move during a financial year.
Yeah. So, of course, this product, we all know that, the company is 91%. Today's AUM is two-wheeler, and two-wheeler is little seasonal business. Basically, our main season is Ganpati festival, Dasera, Diwali, Gudi Padwa. So this is so our revenue are also, generally gear up in the third and fourth quarter. But of course, now we have been added many more products like three-wheeler EV is a continuously a demand across the year. Small business loan, it is also continuously going to be remained across the year. Same is the case with top-up. So now going forward, it seems that this seasonality of revenue impact will gradually come down.
How much time will you take to bring it down? Because your October to December revenue accounted for a large chunk of your financial year revenues. So when do you see this evening out, given the fact that you are getting into other segments?
Yeah, so by 12 to 18 months.
Okay. Give me also a sense of your asset liability mismatch. While you are on a comfortable side on the first year, I think between first and third there is a mismatch which is there. Do you see this fundraising helping you bridge that gap?
Yeah, definitely. And generally we borrow, we lend our average ticket tenure is around 27 months. Minimum is 12 and maximum is 36. And our borrowing also, generally we borrow a term loan or any of the instrument which is more than 24 months. So there are very, except the CC facility which is every year renewal, there is not much of the asset liability mismatch. And after introduction of this fund, it seems that it will be completely come to almost zero.
Also, give us a sense of, sir, your distribution. You are in 66 locations and in 6 states. How do you plan to expand your presence across more cities?
Yeah, so first of all, out of the 66, there are a couple of locations, around 20 locations, which has been just last 1.5 year only we started. So further, firstly, we'll focus on those locations to penetrate more and reach to the market share of at least 14 to 16%, which generally we have in after any of the location where we are 3 years old. And then, of course, we'll expand our other products to, leverage our infrastructure cost we have from the 28 offices which we have across India. And in future, we are also, yes, of course, we are trying to expand another location, especially south side. We want to expand where all these products are being well accepted.
Mm-hmm. You also plan to go into gold financing as well from here on?
No.
Because when you said that you want to expand to south, that's one segment which is very active in south. That's the reason I asked.
No, south is also good market for two-wheeler, good market for, three-wheeler, electric also. And there are also a couple of people who are not less access to credit. So this is how, and most importantly, the payment culture, servicing the EMI is pretty good in south. So we want to, focus the next at the south.
Give me a sense of your distribution source, because I understand that it's roughly 90 odd % which you do through dealers. So, if that is the thing, what is the kind of commissions that you pay to the dealers, and because you are in a very highly competitive market where other financing companies are there, NBFC financing companies are there, and banks are also available in that segment. So, how do you, what kind of incentives that you pay out to the dealers as compared to your competitors?
Yeah, so this is a very subjective, and it is always a performance-based incentives. But yeah, you are absolutely right. We have to give a payout. Most probably 2% is the minimum, but then of course it is the boosters. There is a quarterly incentives, there is a yearly incentives. But this all depends on the performance of the dealers. So of course this is a very competitive market, but we have been able to manage very pretty nicely.
And how does it vary for electric vehicles? Because you said that the IRR for electric vehicles is much lower. So, how does it vary for electric vehicles?
Yeah, so electric vehicle, there is no need to pay out for the many of the brand, or if at all we have to pay, it is very minimal.
Why is that? Is the cost taken by the?
Because they want to push their products. Yeah.
So, the manufacturer is paying out the incentive to the dealers in that sense?
Not really. They come out with sometimes subvention schemes also, some promotional schemes also. But relatively, we have to pay less payout to the electric vehicles dealer.
Sir, how have you seen the sales of electric vehicles, given the fact that government has come out with subsidy for electric vehicles, and now the new Prime Minister's FAME 3, which as we call it, talks about a process through which the manufacturer gets the subsidy once the dealer uploads the details on the platform. So, do you see that helping penetration of electric vehicles and demand for two-wheeler financing?
Yeah, it will definitely affect, and it has already started affecting, and it is every year on year electric vehicle is increasing sale. But most likely the day the charging stations will come on place, and there will be at a regular interval, at a regular places the charging station will come. This will pick up more fastly.
My final question is on your NPAs, because it's little over 3%. How well are you provided for these NPAs?
So our credit loss is very minimal. It is less than 1%. And as far as provisions is concerned, we have provided 20% on our NPA. But generally, the two-wheeler customers remains in NPA, but eventual loss are very less.
Okay, and do you plan to increase your provision coverage ratio for this in this sense?
Yeah, so this year we are going to provide for 24%.
Mr. Shah, it was a pleasure talking to you. Thank you very much for joining us on NDTV Profit. Your IPO is opening on September 23rd, closes on September 25th. Price between 114 to 120 rupees per share. That gives a company a value of over 600 crores at the upper end of the price band. Thank you for watching NDTV Profit.